Welcome back. Hope you're having a good morning. Well, we're expected to start off with a gap of closer on 90 points odd. So that's seeing a good follow through from yesterday's 700-point rally. Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning and good to see you, Ben. Well, the sector that's outperformed in the last two sessions is the consumption themes. That's the FMCG names. How do you approach this space? One would think that maybe, in fact, this government will focus more on the rural play and, help those companies. But maybe, in fact, they just continue with the development agenda. How do you approach these FMCG names after this rally? The index itself is up, I think, 5-6% in the last few sessions.
Yeah, good morning, Nigel, and thank you for having me on your show. I think FMCG also benefits from the fact that it has been under-owned, and it is a sector which has lagged the broader market, largely because the earnings have been very slow. A lot of product categories have got maturity, so volume growth is like low single digit or thereabout. And valuations were still pretty, I would say, rich from that point of view. So investors were underweight FMCG. And now I think, given the circumstances, given the election result, you need to have a few more defensive stocks in your portfolio. At the same time, I think a lot will be done to improve rural consumption. So from that point of view, FMCG certainly is an interesting sector to invest in. But I think that this is a flavor of the season, and overall earnings growth have been stagnating in FMCG. I don't see that changing materially. If rural starts to do well, then urban may kind of slow down. So I don't think that it's a sector to be overweight on at this point of time. And the real defensive sectors to be invested in, I think, would be pharma and IT. And from that point of view, I'm more positive on those sectors than FMCG. But if you still wanted to invest, I think some of the smaller companies in the FMCG space like Jyoti Laboratories, Imami, to an extent, Zydus, I think they could be more interesting plays because some of the categories that they are in, to an extent, are not as mature as some of the soaps and detergents and toothpaste with the large MNC FMCG companies are involved in.
Dipan, hi, good morning. Thanks for joining us. So, so much dislocation, right? That's the word which comes to mind. 12% swing in 3 days. That's the Nifty, and flat for the week then finally from Friday's close. But so many stocks still dislocated in that sense. Anything looks interesting? From a sort of short-term perspective, which is maybe gotten beaten up a little bit more, or you think yesterday largely corrected that?
See, I think that, Prashant, the PSU defense companies, I think you could expect a trading rally over there. End of the day, the earnings season has come to an end and they have been the best performers over there. They have corrected a little bit, but there's a lot of appetite for that kind of earnings visibility. And I think once politics goes to the background over the next maybe 2-3 weeks or so, right now we'll have what we'll hear in the next couple of weeks is the portfolio allocation and who the cabinet ministers are. And then I think this entire, politics will die down, will go to the back pages. From that point of view, I think if investors' interest still remains very strong in the market and the SIPs continue the way they are, then mutual funds will tend to buy the stocks that they are more or less already invested in. They're just that they're available slightly cheaper. So I think that from a trading rally perspective, even from a short covering perspective, I think PSU stocks led by defense companies, you could see a trading rally over there. But, I'm not sure what the longer term prospects of these companies given the very high valuations over there.
Okay. Dipan, hi, morning. Yeah, fair point. So you're saying long-term pure fundamentals, given the valuations, maybe not too clear. But let me ask you about the other theme. Now, if you want your portfolio to still have exposure to CapEx, manufacturing, assuming that these things are not going to go away, in the next government policy or the next budget, then just can you give us some stocks, 1 or 2 names that you would still be comfortable with in order to reflect the manufacturing CapEx play in a portfolio?
So I think there are some companies which I think have faced minor setback too. One, of course, is Praj Industries, our favorite in the capital goods sector. It has underperformed and it's got hit by government policy on what can and cannot be converted to ethanol. But I think export markets are growing pretty well over there. And eventually, I think India needs more and more ethanol capacity, be it from sugarcane or from grains. And definitely Praj Industries is a technology and a market leader there. Valuations are reasonable. So I do feel that amongst the capital goods space, That's one company which can do pretty well. Another company which comes to mind, which we want to look at only in terms of a correction, 15-20% type of correction, is Action Construction Equipment, ACE. And that's amongst the largest crane manufacturing companies. I don't think that the kind of construction activity taking place on the real estate side and on the infrastructure side is going to slow down. And this company performance has been exceptionally good, and order book position also is pretty decent. And I think that if you get at a reasonable valuation, this is one company which can grow typically at 15-20% for next 3-4 years, purely on account of the industries it sells to are doing exceptionally well.
Dipan, we were just discussing themes, capex, industrial, consumer, economy that you can still keep in the portfolio. Does CG Power make the cut?
No, I think you were talking about CG Power's last 1 year stock price performance, but you go back 3-4 years, 5 years maybe, and it has gone up 30x. It's one of
That is true.
It's India's classic turnaround story, and certainly I think for the new owners, it has created phenomenal value. But in a lot of CG products, CG Power's products are very traditional products, and they're doing exceptionally well just now because of investment taking place in electrification, distribution, and related industries. And I think that they're trying to do too many things as well. And it's not that the stock is cheap now. I think at about 70 times trading, 12 months, I think a lot of the positives have got captured in. So I would just like to, remain invested if you're already invested in CG Power, but from new investment perspective, need to look for stocks which are more reasonably valued below that, 25, 35 times trailing 12 month with 15% type of growth rate within the capital goods space. And these stories will emerge also. See, we have a budget also coming up. And these days, budgets are more like a statement of intent or vision. And maybe the sectors that the government wants to now focus on, those also will be listed. And some stock ideas would come over there from the budget as well. So I would say that just hold your investments in the capital goods space. I think new categories may emerge over there.
Okay, all right. Dipan, I wanted your view on some of those Ferris names. I know they haven't been your favorite, but Kotak as well is sounding a little bit cautious on sale. They're saying that the valuations are frothy and the company is on weak footing from here on. Let's run you through the details are there. It's their top sell idea, target price of around 85 rupees, which implies a 40% downside. The reasons, as I mentioned, is fundamentally weak and also they're deteriorating is what they go on to say. Let's run you through the top points. They're saying that the volume growth will be muted in the coming years and the company will lose market share. To give you a couple of numbers, utilization levels are already high at around 84% and the market share in the last many years has declined from more than 20% to around 12% odd. And Kotak says they lose market share even from year on because their growth will be lower than their peers. In terms of deleveraging, they're saying that it's the end of the deleveraging cycle for them because the company is talking about adding 15 million tons of capacity, greenfield and brownfield capacity by FY31. So they're bracing for a period of high leverage, high capex, you have negative free cash flows, and that's a bit of an issue for them. Third point, in terms of valuations, they're saying valuations are very, very expensive. They've removed the EV upon EBITDA. They're saying SAIL trades at around 8.5 times EV upon EBITDA, while its peer set is trading at around 6.5 to around 7 times odd. And given the deteriorating ratios, they believe there's no reason why should it be trading at these levels. However, they put a note on privatization of SAIL as well. Some part of the street believes at some point of time, SAIL will be privatized. They make this point that the majority win, for the ruling government now is quite slim. So to push through an unpopular measure like privatization of SAIL will be difficult. And also SAIL has a very high employee base of more than 56,000 employees. So put all this together, Kotak is negative on SAIL and they have a target price which is much lower than current levels. Dipan, I want you to come in there. Ferris hasn't been your favorite. Will you agree with Kotak or do you have a contra view?
I tend to agree with Kotak, and I think that the kind of excess capacity which is there in China is going to play out in the global steel market, and it's going to be a bit of a cloud on Indian steel companies as well. We are seeing at the ground level that steel imports are increasing, and this quarter steel companies have been able to sustain their profitability because of lower raw material costs, but that also may change. But, Nigel, very positive on non-ferrous segment, and within the commodity space, I think non-ferrous, clearly the way the prices have gone up, I mean, across the board, whether it's copper or aluminium, nickel, tin, they're all about anywhere from 15 to 25% higher this year. And those gains have not been captured in the March quarter earnings. So I'm very positive on companies like, say, Vedanta, even a Hindalco. I think if they're able to successfully get the Novelis IPO off the ground, that would certainly kind of improve the balance sheet strength. And they are also going in for major expansion. Even a PSU like NALCO, National Aluminium, that also I think could be turn out to be a dark horse, because just purely on account of the fact that LME prices are significantly higher, and companies like NALCO, Hindalco, or Vedanta have pretty decent backward linkages. Like Hindustan Zinc goes right from mining all the way to the finished metal, and there's silver over there as well. So I think more than the ferrous, the non-ferrous metals will do exceptionally well this year.
You know, Dipan, just a quick word on the political sort of landscape and what it means for markets. So yesterday, for the first time, we saw, there was that photo up, there was that NDA meeting, and the sort of visuals will come up. So interesting. The NDA leaders, including now, of course, alliance partners, JDU, TDP, etc., all came together, but not just them, but others as well. And of course, the senior BJP leadership with Prime Minister Modi sort of attending and chairing that meeting. And actually all NDA partners rallying behind Prime Minister Modi and nominating him as the leader of the next government. And of course, the swearing in is going to happen on Saturday. And after that, you can see visuals, right? Prime Minister Modi, and next to him, there is Chandrababu Naidu and Nitish Kumar there as well. Mr. Shinde is there and many others. So, and of course, there was that photograph which came through. That's, of course, those are visuals coming in through of the UPA meeting, I think, which happened a little earlier. And they essentially just said that we will decide on what is the appropriate thing to do at the appropriate time. I mean, cryptic, but not very much beyond that. Dipan, the swearing in is going to happen on Saturday, but after that, there's going to be a little bit of jostling for ministries, top cabinet berths, etc. Now, one space which one can kind of see, which is done very well, is railways, right? You think that is in the play, and does it matter? Because so far, for the last 10 years, it doesn't matter who the minister really has been. Because, I mean, for the market, it has been Mr. Modi. But does it start to matter a little bit more now if, a ministry like the railways is in the play between allies from a market perspective? Go on.
No, Prashant, who will take what is, of course, very difficult to call. But, one very important aspect of the entire Modi government has been that they have had some exceptional ministers as well, like Jai Shankar, like the railway minister, the defense minister, the heavy industry. And it's the ministries who have been responsible in the fabulous execution which we have seen in the country for the last 5 years or so, 5-10 years or so. And the kind of PSUs under those ministries also, they have been kind of rejuvenated, and they have been more activated and more proactive in terms of their growth plan, improving their efficiency and contributing materially, undertaking large projects as well. So I think that who the oil minister is, because that affects the PSUs. Of course, finance minister, defense minister are very important, but railway ministry, heavy industry ministry, I think they're all very important from the market's perspective, because we want ministers who can deliver. And there were a few in the Modi cabinet who did deliver in the last 5-10 years or so. So I think that allocation of ministries is very important, and that may set the tone for some of the PSU stocks that are so fancied by the investors.
Okay. All right, let's see. I think, it's going to be interesting to watch as this, portfolio allocation now happens, the responsibility sharing.